And the thing is that what did we learn from this article, and how did Wall Street escape the crypto meltdown? Okay, this is an article by the New York Times, and what happened was that they kind of did a report about how Wall Street was able to avoid the crypto crash, right? Let's see if my audio is working right now. Hopefully it is. So anyways, so right now the stream is live. Okay, so the article basically talks about how Wall Street escaped the crypto meltdown, and for me the biggest takeaway, number one, is luck. Okay, definitely has something to do with luck. Number two, and that's the most important thing of all, that how Wall Street have escaped this crypto meltdown, and that is risk management. Okay, so in the beginning of this article, it basically talks about some interesting terms about how the BNP French bank put together a list of 50 stocks they thought were overpriced, and then including many with strong links to digital asset, right? And then they nicknamed this collection the Cappuccino Basket, a nod to the frothiness of the stocks, right? Then they spun it into a product that they essentially gave it to the clients, pension funds, hedge funds, the managers of multi-billion family fortunes, and other sophisticated investor, and an opportunity to bet that the asset would eventually crash. And in the end, lo and behold, what happened? These assets did crash, right? Right now we have Bitcoin trading back at 20,000-ish, I think. Yep, we're back at 20,000, but it did jump, crash, okay? So according to this article, basically what they're saying is that the move in the crypto market will coincidentally with retail money flooding into the US equities and equities option, okay? So what he's saying is that there's a big bifurcation between retail positioning and institutional positioning, right? They decide to name the specific stock that a BNP client go to bet against, right? So basically, in a great cryptocurrency bloodbath of 2022, Wall Street is winning, right? So a bunch of people basically won betting that crypto would go down. And the reason for this is that, it explains why. And I would tell you why is it luck, okay? It is not that financial giants didn't want to be part of the fun, but Wall Street banks have been forced to sit it out, or like BNP approached crypto with ingenuity, partly because of regulatory guardrails put in place after the 2008 financial crisis, right? So I would say that they were lucky in a sense that there's a lot of regulation guidelines that they cannot, fully FOMO into the market, right? And at the same time, you hear the stories of institutional investors dipping their toes, but it's actually a very small part of the portfolio, right? Say Rina Agara, okay, finance professor in Georgetown University, right? So basically, back then in the bull market at the peak, everyone was saying that, oh, institution is buying, blah, 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 blah. But actually, institution portfolio in crypto is actually very small. And if you look at the video that I did a few days ago about the UBS report, family offices are only allocating around 40-ish% into alternate asset, right? So it kind of explains this as well. So unlike the fates in the financial crisis, when the soaring of the subprime mortgages backed by complex security took down both the bank and regular people, leading to a recession, the fortune of Wall Street and Main Street have diverged more fully this time. Okay, so it kind of shows you that regulation, in a sense, guidelines do help them. But if the crypto meltdown has been a footnote on Wall Street, it is a boosting event for many individual investors who poured their cash into the cryptocurrency market, right? So what they're saying is that I really do worry about the retail investors who have very little funds to invest. They're getting covered, right? So a lot of retail investors got in with the promise of quick returns, and unfortunately, with the crash, a lot of retail lost their money, right? But they talked about the whole story about how there was this guy who became a how a guy had like 2 Bitcoins stuck on the Celsius network, and is afraid that he'll never see them again, right? So it's kind of sad to see a lot of small investors tanking, right, the fortune, right? Because of the Celsius freeze, and you have a lot of people filing for bankruptcy. Even Voyager has filed for bankruptcy as well, right, recently. So basically, the Wall Street banks, when the market was soaring, right, wanted to participate, right? But regulators just wouldn't allow it, right? So I would say that it is luck to a certain extent. US bank regulators have warned banks to stay away from activities that would land cryptocurrencies on their balance sheet. That means no loan collateralized by Bitcoin or other digital tokens, so they are not exposed to the all of the lending protocol crashes right now, right? So Goldman Sachs put Bitcoin prices on the client's portal, so client can see the price move even though they can't use the bank service to trade them, right? And also they began offering some of to the service wealthiest individual clients that have a chance to buy shares and fund linked to the digital asset rather than giving them the ways to buy a token directly, right? So this is actually echoing the same sentiment with the UBS report that I talk about. Smart money, they don't buy the tokens directly, but they buy exposure to the token. They buy infrastructures, right? Because these funds are usually linked to the digital asset, maybe related to infrastructure as well, right? So it also tells you about a lot of training has been done, a lot of risk management has been done, and so on, right? So to sum up, how Wall Street avoided the crypto meltdown? Well, first of all, they were lucky thanks to the regulations and that has been put in place. And number two, because of risk management. They didn't put all of the life savings into crypto. They diversified, right? So they have good risk management. So I think the biggest takeaway for this is that in the future, when the bull market comes back again, don't be afraid to sell. Don't be afraid to set your stop losses and stuff like that. Conserve, save your capital no matter what the market sentiment is, because you'll live to fight another day. So just wanted to share this article with you. Let us look at the market today, right? Right now, Bitcoin is about 20,000. We are kind of hovering sideways at the same time. The EU market looks good, okay? Asian market was actually quite down as COVID concern resurged. Pre-market in the US, fall slightly after the day's rally ahead of Fed minutes. So the Fed is gonna have some announcement today. People are worried about, this, right? So 5 things to know this morning. Observation there. So stocks is in holding pattern. So it explains why cryptocurrency right now is in holding patterns. Sorry. And then Fed minutes and indicator. Okay. So investors have plenty of data and report to sort through Wednesday as the market wait a potential recession, right? So right now, it is potential. It is not confirmed. But if the data looks like it is a recession, then it would definitely have some downward pressure, right? So the Fed is scheduled to release a minute from its June 14 and 15. So this is actually last month, right? Giving insight into the central bank strategy to fight against 40 years high inflation, right? So the data is out to come out in like around 35 minutes. Okay, so around 35 minutes this thing will come out. So expect volatility in 35 minutes. Okay, or maybe we already experienced some leak and that's why the market is kind of positive as well, right? So we'll talk about the UK government as well regarding to crypto. That's the crypto market. Bitcoin by 20,000, Ethereum at 1.1 thousand. We look at this. If we look at the crypto market cap, it went back up. Before it was 800-ish. Okay, now we're at 900 billion, so that's good. We look at stable coins. Let us see this. Stable coin went down, so it means that people were buying cryptocurrency this time. Okay. If you look at the market, we have some double digits. So this is Curve Finance, a SAN. Okay, interesting. SAN, I think maybe some announcement or something. And also, so Metaverse play is actually quite good. Okay, Metaverse, SAN, and Mana, and so on. So we kind of see a sea of red. So it really kind of shows you like how the market turned very quickly, right? Yesterday, I think it was kind of reddish / green, but now it's a sea of red. I mean, a green. So as always, this is a very good indicator to really show you the crypto market cap, right? We remember when we had all-time highs back here, right? If we're not going to go back to here to $2 trillion and still hover below 1 trillion, we're never going to get that all-time high, right? So this really shows you about the whole market environment, the whole sentiment, right? And then if you look at on-chain data, I like to look at Ethereum on-chain data myself. It is more telling to a certain extent. Let us look at the reserve. Reserve in general, really high, okay? There's a lot of Ethereum on exchanges right now, okay? And then if we really look at the exchange inflow and outflow, net flow, okay? Total by 1 month, right? So, yep, Ethereum is going to exchanges. So there is some risk with regards to all coins. I'm actually very skeptical. I've been talking about on-chain data for some time. If on-chain data, we do see a lot of green, it basically means a lot of Ethereum is into the market. Could that mean more selling pressure, right? So anyways, to our daily news, Bank of England wants stricter rules for crypto to avoid systematic risk, okay? So the UK Central Bank renews its concern about stablecoins and wants stricter laws and regulations of the crypto market as a whole, okay? So they are talking about, better regulations. So definitely we have yet to see how the UK government is gonna look at this, because the UK government in April, right, announced plans to become a global crypto asset technology hub, right? With stablecoins being used as a recognized form of payment, which also explains why back then USDT issued a British pound USDT, right? So anyways, this is just, Bank of England reaffirming their stance on more stricter regulation. At the same time, interestingly, this report just came out. Majority of British crypto owners reviewed to be holders, according to survey, right? So according to this survey, they invited a sample of 5,916 UK adults, including 713 crypto asset owners. The report reviewed that 10% of citizens hold or have held crypto, with 55% never having sell any. Okay, so only 7% are currently holding more than 5,000. Okay, and only while 52% of current holders have holdings more than £1,000. Okay, so with another finding that comes at no surprise, they tend to be younger, okay, than the general population, with 76% of them of 45 years, okay, and mostly they are male, okay, yeah, not surprising. A vast majority of them hold crypto, while the second most popular type of asset is utility tokens. Interesting. Okay, and then if you look at the takeaway, the common trading platform, trading pattern, 68% owners most frequently acquire crypto from centralized exchange, and 81% use exchanges to sell. So usually the approach right now in the UK is I think they are keeping the money in centralized exchanges, so less exposure to all these DeFi risks, these lending protocol insolvency, right? But there is centralized exchange risk, but it really shows you that the people in the UK are actually traders, right? In a sense that, and also they have been holding, right? So trading and holding, buying more and so on, which is interesting because it really echoes this sentiment about what will happen if the Bank of England, or what if happen if the UK really decide to really regulate this industry, right? So next news, are still no plan for US central bank digital currency after the latest Fed meeting. So after the latest Fed meeting, the panels did not see any urgency to pass ahead with CBDC. They talked about, having the CBDC wouldn't systematically lead to drastic change to the global currencies ecosystem, right? So they're not in a rush to do this. So just to let you know some updates, okay? Another very interesting related to DeFi, for those of you who do not know, MakerDAO voting on collaborating with traditional bank. So MakerDAO is a DeFi protocol, right? So what happened is that they decided to come a vote, right? The first collateral integration from a US-based bank in the DeFi ecosystem is getting closer. This is unprecedented, which is really interesting to see. So the Maker governance vote to add RWA 009, a 100 million DAI debt ceiling participation facility proposed by Huntington Valley Bank, as a new collateral type in the Maker protocol, right? So what basically means is that this will essentially allow the Maker protocol to begin issuing real-world loans to borrowers for a fully backed traditional institute by meeting the bank standard. Okay, so DeFi protocols, although we do see a lot of risk and stuff like that, they are now through the DAO governance and voting starting to work with traditional banks, which will be interesting to see whether DeFi advantages of on-chain and decentralization would still be present in these decentralized protocols, because right now you have a point where things are centralized, where you're relying on a traditional bank. But definitely this crossover is really interesting to see. Okay, so I just want to share this with you. So I'm moving on to our NFT news. LFG News, this is from LFG News, shout out to them. So they talked about Hey NFT Monkey, which is a platform that allows you to easy and fast way to check floor price and sell all NFT collection without the need to log into your wallet, which is cool. Seneca 333 Club, so Zen Academy, Seneca, he came to our channel before and was interviewed him before. Big congratulations to Seneca, really nice person. He finally sold out his NFT collection, and right now his NFT collection is trading at around 20 ETH, so which is pretty much impressive. Okay, so congratulations to Seneca. He shared about his view about this and also his learning and future plans. Mulligan, the guy from Pre-Mint, he decided to acquire something, okay, which should be integrated in the platform within a few weeks. Okay, so Pre-Mint using the funds that they have is starting to acquire other different type of features or software. Okay. So another interesting news that I saw today is that Pudgy Penguins had an airdrop, I think, which is called Pudgy Presents. So these presents became Pudgy Wallets. Okay, so now the Pudgy Penguins themselves could start fishing, right? So I think it might have some certain of utility. So if you're a Pudgy Penguin holder, definitely check out your Pudgy Penguins, because now they're Pudgy Wallets, and then maybe there's some sort of utility. And then Cybercon published a new Medium article saying that they actually own different land asset from different projects, like the 600 land they own in the Sandbox game, which is pretty interesting. So it really depends on how early they brought Sandbox land and how much they have right now. Okay. ENS, some domain name services registration spiked 216% in 1 week, right? So secondary sales on OpenSea, meanwhile, exceeded 7.9 million over the same period. So sometimes when we're talking about NFT bear market, it is interesting to see different type of things that are happening in the market. There is always different type of bits and pieces that are very bullish, right? And if you so happen to just capture one of these, you can make life-changing gains, okay? So Ryan Carson, the guy who left Moonbird to start his own fund, is gonna start a podcast and Twitter space that will be like NFT Shark Tank. So project will, promote themselves and then they will decide to sweep or not on the mint date, okay? So another very interesting news, study shows that Singapore, Hong Kong, and Canada are leading in NFT searches worldwide, okay? But at the same time, Poland, Nicaragua, and Belize are the most anti-NFT countries. So it's interesting to see. I know that there's a lot of public events here in Hong Kong about NFTs and stuff like that. So it's interesting to see sentiment in Hong Kong is positive. But as I always cover, because of the crypto regulation that is going to be passed in March 2023, there's a chance that we no longer retail can trade crypto in a short period of time, which could definitely affect the sentiment for the NFT market, okay? So besides regulations that affect NFTs, one thing that I do want to point out, and this is an article from India, okay? So according to India right now, they have a new tax regime. So what happened is that NFT platforms have the task cut out with TDS coming into effect based for challenges, right? So what happened is that there is a 1% tax deducted as source TDS applicable to virtual digital asset, okay, that come into effect from July 1st. And according to this article, this is affecting trading volumes of digital collectibles, right? Known as NFTs, okay? So what they're saying is that NFTs in India pick up pace last year with many film stars, sport person issuing the NFTs, right? But right now in India, there is a slow in trading because people have to pay tax on source, right? So the volume are down 70% throughout the industry. Okay, and according to the article, this TDS will have significant negative impact on the growth of popularity of NFTs, and especially in India, right? So what happened is that TDS on VDA entails mandatory deduction by the buyer of 1% of the amount payable to seller of digital asset when the transaction amount exceed 100,000 rupees, okay, 10,000 rupees, okay. For example, if an NFT is sold for 100. All NFTs are charged an artist fee of 5% and services fee, including good and services tax, of 2.95%. This way, the net sale amount of the NFT token will come to 92.05 after the deduction, right? So it means that once they sell the NFTs, there's a lot of tax that's already being deducted, right? And as an NFT trader, these people will have to register and mark down all these transactions, which could dissuade people in India from buying NFTs, right? So this 1% TDS will be applied solely on the net sale amount, which worked out to be 0.92, 1% of the 92.05 after the application of the TDS, okay? So the amount deposit would be 91.13, explained Gauri, okay? So he's saying that right now, both buyers and sellers have turned cautious and are discouraged by the application of the TDS, okay? And a new taxation is providing major hindrance to investors and innovation in the industry, okay? So if there are NFTs that are targeting the Indian market or NFT markets that are in India, they'll have to comply with this, and definitely this would affect the momentum, right? But at the same time, according to this article, it's boosting investor confidence, right? Taxation on income from sale of virtual asset will result in a slowdown of a sector that was growing rapidly, okay? But it's also expected to boost investor confidence, okay? So it means that the legal solidity of this asset class has intensified. So it basically means that because you're being taxed on this, the government recognizes it as an asset. In the future, if there's a chance that you have, you have to go to court or whatever to claim your NFT rights, right? It means that maybe the government will recognize it, right? But it is interesting to see how this would dissuade NFT trading in general. So this is all today's news. Thank you for watching. Remember to like and subscribe. Let people know about this. Share the video with your friends if you think this is helpful. If you have friends in India, feel free to ask them what they think about this taxation. Comment below and let me know what you think and whether this would really affect you in your trading. So this is your host, Non-Fungible TC. Thank you for watching. Signing out.